Welcome back to Dinar Community Channel. The global financial landscape has been shaken to its core as an unprecedented surge of activity surrounds the Iraqi dinar. What was once a subject of speculation has suddenly transformed into a tangible reality, leaving banks, investors, and entire financial systems struggling to keep up with demand. The announcement of a significant shift in the Iraqi dinar's value triggered an avalanche of responses worldwide. Within hours of the confirmation, appointment systems at exchange centers and major banks were overwhelmed. Records were shattered overnight as millions of IQD holders scrambled to secure their positions in what many describe as the most transformative financial event in modern history. The scale of this overflow crisis is unlike anything ever documented in the currency world. Entire infrastructures designed to manage high levels of financial traffic are buckling under the unprecedented demand. Banks in the United States, Europe, and the Middle East reported that their appointment platforms reached maximum capacity within minutes of opening. For many institutions, what was expected to be a gradual wave of interest erupted into an uncontrollable flood, with online systems crashing, phone lines jammed, and physical branch locations swarmed by individuals determined to finalize their exchanges before the windows closed. The Iraqi dinar has been at the center of rumors and financial discussions for years, but its official revaluation has transformed speculation into hard numbers. Overnight, individuals who quietly held stacks of dinar became high-net-worth clients, and banks suddenly found themselves facing a logistical nightmare. Appointment slots, typically spread out over weeks or months for regular services, filled up in a single night. In some regions, banks resorted to emergency scheduling protocols, adding 24-hour exchange windows, yet even these measures did little to ease the tidal wave of demand. Investors who once faced ridicule for their long-term belief in the dinar are now standing in packed lobbies of global banks, waiting for the chance to secure life-changing transactions. The atmosphere is one of both excitement and tension. For many, this is a once-in-a-lifetime opportunity to convert speculative holdings into generational wealth. At the same time, the logistical strain is leaving countless investors frustrated, unable to secure appointments despite holding currency verified as authentic and eligible for exchange. Stories are emerging of individuals waiting in line outside financial institutions for hours, only to be told that every available slot had already been claimed. The ripple effects extend far beyond individual investors. Global banking systems are coordinating behind the scenes in ways that haven't been seen since the 2008 financial crisis. Institutions are reallocating staff, reassigning resources, and calling in backup systems in an effort to process the historic volume of requests. Technology platforms designed to manage banking appointments, normally tested for high demand during tax season or holidays, are finding themselves wholly unprepared for this historic surge. In many cases, IT teams are racing overnight to expand server capacity and reinforce appointment software just to avoid complete collapses. What makes this overflow crisis even more unique is the diversity of those affected. Unlike traditional financial booms that benefit the elite, this wave of wealth creation is cutting across socioeconomic lines. Schoolteachers, veterans, small business owners, and retirees, all of whom quietly held IQD for years, are now pushing into the same lines as hedge fund managers and high-profile investors. The revaluation has democratized access to financial transformation, but in doing so, it has also created an unprecedented bottleneck. The media has seized on the unfolding chaos, with headlines describing long lines wrapping around financial centers in major cities. Photographs of crowded exchange lobbies have become viral symbols of this turning point. News anchors discuss the event as both a crisis and an opportunity, emphasizing the dual realities of historic wealth transfer and operational paralysis. Economists point out that while banks may struggle now, the long-term benefits of this capital infusion could stimulate entire economies, boosting housing markets, small businesses, and consumer spending. Security has become a major concern as well. With wealth moving at such rapid speeds, banks and law enforcement agencies are tightening protocols to prevent fraud, theft, and exploitation. Reports suggest that some opportunists are attempting to take advantage of inexperienced investors, offering unauthorized exchange deals or promising unrealistic contract rates. Authorities warn IQD holders to remain vigilant and only engage with recognized financial institutions. Meanwhile, armored trucks, security guards, and even police presence have been increased at certain branches as banks work to protect both their clients and their staff during this extraordinary influx. The international impact cannot be underestimated. In Europe, financial centers like London and Frankfurt have seen similar overflow crises, with their appointment books fully consumed almost immediately. In the Middle East, where the cultural and historical ties to Iraq are stronger, entire banking systems are dedicating specialized departments solely to handling dinar exchanges. Asia is no different, with Hong Kong, Singapore, and Tokyo experiencing surges in appointment bookings as investors across the continent move quickly to secure their positions. For many banks, the crisis is less about whether they can process the exchanges and more about how they can manage the sheer human demand. High net worth banking divisions that normally handle a few dozen elite clients at a time are suddenly flooded with thousands of individuals demanding personalized services. Private wealth advisors, legal specialists, and tax professionals are all being pulled into the frenzy, creating cascading delays as professionals scramble to meet the demand for financial guidance that accompanies this sudden influx of wealth. At the core of this event lies a fascinating human story. Individuals who once lived paycheck to paycheck are now standing on the edge of financial independence. Stories are emerging of single parents planning to pay off homes, veterans preparing to fund medical treatments, and families considering creating charitable foundations. For every headline about system collapse, there are personal accounts of lives being forever changed. This duality, crisis for institutions, transformation for individuals, is what makes the IQD overflow phenomenon truly historic. Yet, the chaos also carries risks. Financial advisors warn that sudden wealth can disappear just as quickly if not managed properly. With such a dramatic revaluation, new millionaires and billionaires are being created overnight, many of whom lack the financial literacy to handle such sums responsibly. Experts stress the importance of financial planning, tax strategies, and diversification. Governments, too, are preparing to adapt their systems, as sudden surges in taxable wealth create both opportunities for public revenue and challenges for enforcement. The overnight breaking of records has left analysts debating how long the exchange frenzy will last. Some predict a short window of intense activity followed by stabilization as the majority of IQD holders complete their transactions. Others believe the wave could continue for weeks or even months, as individuals who were initially hesitant are compelled to act after witnessing peers succeed. Regardless of the timeline, what is certain is that the initial 48 hours of the revaluation have been unlike anything the modern financial system has ever experienced. The psychological impact is equally significant. Investors who endured years of skepticism are now vindicated. Online communities that supported the IQD journey for over a decade are celebrating their perseverance. This has created a sense of unity among investors across the globe, as forums and social media platforms buzz with stories of booked appointments, successful exchanges, and life-changing outcomes. At the same time, frustration remains high among those still locked out of appointment systems, amplifying the urgency and anxiety of the moment. Governments around the world are also taking notice. The sudden redistribution of wealth has geopolitical implications. Iraq itself stands at the center of the global spotlight, with its currency now redefined as a powerhouse in the international market. The government's ability to stabilize and manage this newfound strength will shape both regional and global economics for years to come. Meanwhile, nations observing the transformation are recalibrating their financial strategies, knowing that the IQD surge has the potential to reshape trade, investment, and foreign policy. This overflow crisis is not just a financial story, it is a cultural moment. Families are reimagining their futures, communities are preparing for new realities, and entire industries are adapting to an unforeseen financial paradigm. The symbolism of long lines at exchange centers, the excitement of overnight wealth, and the chaos of broken appointment systems all merge into a narrative that will be studied for decades. It is a living case study in the unpredictability of global finance and the extraordinary consequences of a single nation's currency shift. As the dust settles, one thing is certain: the breaking of records overnight is only the beginning. The full scope of the IQD revaluation is still unfolding, and its impact will continue to ripple through economies, markets, and personal lives for years to come. For now, the world watches as banks work around the clock, investors cling to their appointment confirmations, and millions of lives are transformed in real time. The overflow crisis is not merely a moment of logistical strain, it is a milestone in the ongoing story of global financial evolution. Like and subscribe for more videos.